What if I told you there was a way you could lock in high dividend yields on companies that don't normally pay high dividends? I know it sounds a little confusing. Let me show you what I'm talking about over here. A long time ago when I was a licensed stockbroker, I did a lot of dividend yield farming. I would look for good quality companies that aren't typically known for paying high dividends, but they had some kind of problem, some kind of temporary misstep that sent the stock down. So when the stock goes down, the dividend yield goes up. It could be a bad earnings report, the CFO quits, goes to another company, there's an investor lawsuit, it could be anything. But the point is it's temporary. The fundamentals of the company are solid. Let me show you what I did. So the first thing you want to do is go on a website where you can categorize and list individual stocks by dividend yield. So as you can see, I'm on financecharts.com. I'm going to go up on dividend screeners, click and scroll down to highest yielding. And you'll see a list of the highest yielding stocks is going to come up. Okay, here's the dividend yield over here. Icahn Enterprises is number one, a ridiculous dividend yield. This is because this is Carl Icahn, multi-billionaire's hedge fund, and they have had all kind of accounting irregularities, investor lawsuits, all kind of problems. The stock has fallen off a cliff. That's why they have a ridiculously high yield. I am not interested in that. You're going to get used to some of these companies. You might not recognize them now, but if you do this, you'll start to know these companies. And the companies we're looking for are ones that aren't typically on this list, because a lot of these top dividend yielding companies are complete garbage. They have the high dividend yields because their share price is so low. We don't want to invest in things like that. Some of these are foreign. Number 2, 3, 4, 5 are all foreign companies. AGNC Investment, as well as Annaly Capital, which is right down here. These are both really big REITs, very unstable. They cut their dividends all the time. They lose money depending on interest rates. They're not the kind of companies I'm looking for. I also don't want companies that pay ordinary dividends. I want companies that pay qualified dividends. I'm going to keep more of my money that way. So I'm going to scroll down here to this next one. NextEra Energy. Okay, this is a utility company. They're a quality company. Okay, and they have a much higher dividend yield than they normally have. So I'm going to click on that and I'm going to look at the chart. The chart is going to give me a lot of information. Now the one-day chart is what's going to pop up. So I'm going to go to 5-year and I'm going to look at the 5-year and say, okay, that looks horrendous. It looks like they were doing okay up until 2021. Something happened and it fell off a cliff. I'm going to zoom out to the 10-year. And as you can see, it looked like an investable company until about middle of 2021, and then it just tanked. And that is not what I'm looking for. Not what I'm looking for at all. They're having fundamental problems. I'm not interested. So I'm going to go down this list. Prospect Capital, KKR Capital. These are both business development companies. I'm not interested. Annaly is a REIT. Walgreens. Okay, Walgreens. They have a 12% dividend yield. They do not normally have such a high dividend yield. Let's find out why. 5-year chart. Oh, God. That looks like the ugliest prom date you could ever have. From 2020 on, they've done nothing but lose money. Let's go out to the 10-year just to see how bad it is. Oh, yeah, this is the ugliest girl at prom. If you invest in this company in the middle of 2015 or any time thereafter, you have lost damn near your entire investment. Okay, so this is a big fat no. We don't want that. Let's go down this list. I see a lot of companies that are on here all the time. Arbor Realty Trust, that's a REIT, obviously. How about this? Stellantis, the 4th biggest car maker on earth, with an 11% dividend yield. That is highly unusual. Okay, so that's what I want. That's what I'm looking for. A company that's not normally on here, a good quality company, also pays qualified dividends, by the way, with an 11% yield. Let's go out to the 5-year. Okay, this is what I'm looking for. This looks like a good, solid company. 2020 all the way up to 2024. Something happened in March of 2024 that sent this company down. And that's good because you could see how sharp this fall off was. So there was an event, okay? The CEO sexually harassed somebody, they had an accounting problem. It could be anything. We'll find that out. Let's go out to a 10-year chart, and this proves this is exactly what I'm looking for. See how well the company was doing, and then all of a sudden there was something big happened here in 2024, and it just fell off a cliff. And that's why the dividend yield popped up the way it did. So this is what I'm looking for. My next step would be to get on Google and look up some articles on Stellantis and find out exactly what happened to send this stock down and if it's investable. If you do some research in Stellantis, what you'll find is that they had a really bad earnings report in the middle of 2024. They had a lawsuit from one of their suppliers, too much inventory, just things started to snowball. They're actually looking for a new CEO. So you had a really good company with a hiccup, shot the stock down, which boosted the dividend yield. Now, if you bought it, you locked that dividend yield in at 11%. It'll be 11% for you for as long as you own it. But when the stock goes back up, the dividend yield is going to settle back down to where it normally is, 2 or 3%. But you got it at 11 and you locked it in. So there may not always be a quality company like that on that list of companies with high dividend yields, but every now and then there is. If you pay attention, there's always going to be a scandal. There's always going to be a lawsuit. There's always going to be some reason why the stock goes down. And this is a good time for you to jump in and lock in high dividends and juice that dividend portfolio. Let me know what you think. Add a comment below, like and subscribe to the channel, and I'll see you next time.